Hello and welcome to another video on my YouTube channel. My name is Joris and today I'm going to talk about the 25 Dutch stocks that make up the AEX25 Index. And the AEX25 Index, it's actually coming from the AEX, so Amsterdam Exchange, which is now the Euronext Amsterdam Exchange. And the AEX25 Index is in fact a benchmark for the Dutch market, so for the Netherlands, and it contains the 25 most significant stocks on Euronext Amsterdam. And 3 of them are UK related with Shell, Unilever and RELX. And then you also have one that is Swiss related with DSM Firmenich. And that was a couple of years ago. Firmenich and DSM, Koninklijke DSM, they decided to join forces. And yeah, since then they are noted on the Euronext Amsterdam. Sadly enough for me, they aren't on the SIX stock exchange because a couple of years ago, I think 25 years ago, I was a shareholder of DSM. I kept it for 6 years into my portfolio. And yeah, it was around the time that I was studying around the subject of feed additives, and DSM is really well placed in that industry. So I knew a lot about DSM and I researched them then, and they were really well priced at that time. So I bought them, and 6 years later I sold them for a huge profit. So I was really happy with my investment in DSM. But let's go on with the ranking according to the market capitalization in billion euros. And yeah, you have ASML Holding, which is the leader there with a market capitalization of almost 270 billion. It went down, so it was above 270 billion, but the past weeks it dropped a bit. The PE ratio now also dropped below 40, but it's still quite expensive. And yeah, it's a firm that delivers the equipment for ship makers. So you have ISM International as well. So they are apparently closely related to each other. And ASML Holding, yeah, they rose a lot because of the artificial intelligence hype, and still for me, also below 40, it's way overpriced for me, so I'm not touching that at all. Then you have Shell with a PE of 11.89, definitely worth looking at, but as you know, Total Energies from the CAC 40 had a PE of around 8, so that has a better valuation right now. But on the other hand, you also should look at taxes where you live. So if you buy a stock from the Netherlands, then it's 15% taxes that are deducted from the dividend that is being paid out. And for Total Energies, that one is from France, and there it's 35%. So it depends on your country where you are living, whether or not you can recuperate one of those percentages, so 15 or 35%, whether or not you buy Shell or Total Energy. But yeah, definitely interesting with a PE of 11.89. And then you have Unilever, it's UK related, PE of 22.46, so for me a bit too overpriced, but when it drops a bit and it drops below 1918, then definitely worth investing in some money into Unilever. Then you have Prosus. Prosus is a media company, so for me it doesn't tickle me because it's into the media, and media doesn't appeal to me that much. Then you have Relax. Yeah, again, way too overpriced for me. And then one of the cheapest one on the stock market right now, it's ENG Group. It's a bank, and with a PE value of 7.87, we will see a couple of others in the list coming shortly, which have a really low PE value. But you know what I said about banks in one of my previous videos. When you want to invest in banks, don't go for individual banks. The whole sector is undervalued right now, so go for an ETF that invests in banks, and there your risk is spread over a lot of banks compared to when you go just for one bank. Then all your eggs are in one basket and then they can break easily. You have Heineken, which is really overpriced, but yeah, Dutch people just like Heineken a lot. And Universal Music Group, when you are into music, you can look into that stock for sure. I don't know a lot about UMG because I'm not in that kind of stocks, just like Prosus. I don't like those kind of stock. Adyen, payment facilitator, way overpriced as well for me, but you don't have that many choices if you want to invest into payment facilitators. You have Worldline as well on the French stock market if you are interested in that kind of thing. But Worldline is a really small company. I think it's less than 3 billion market capitalization. You have Wolters Kluwer's, that's a publicist, and they have a PE value that is way overpriced for me. But I like their books a lot. They are also science-focused books that they published, so I like Wolters Kluwer for that, but not for investing it. Then you have Exor with a PE of 5.30. It's a holding company, so yeah, I like the holding a bit, but the fact that they invest in Stellantis is a bit difficult for me. But on the other hand, their market capitalization is 36 billion, 33 billion, and their valuation is complete valuation on book value is 36 billion. So it is momentarily undervalued compared to their book value. And with a PE of 5.30, it's definitely cheap. And they have a payout ratio of only 2.50%. So they will be able to maintain their dividend for a lot of years to come normally. And yeah, if you're into dividend growth stocks, Exor is going to try to be a growth stock, a dividend growth stock in the future, I think. Then DSM Firmenich, the first one with a negative earnings per share, just like Koninklijke Philips with a negative earnings per share of 0.59. So DSM, yeah, when I first invested in it, it had a negative earnings per share as well, but they tend to reorganize themselves, and that costs a lot of money. But then thereafter, in the 3-4 years thereafter, they grow their earnings per share enormously, and then the price of the firm goes up enormously. So that's something to keep an eye on. Then you have what is another one that is interesting? ABN Amro and NN Group, 5.21 and 10.59, financial sector, of course. And ABN Amro, it's way cheaper than ING, but back in 2008, yeah, the Dutch government put a lot of money into ABN Amro compared to ING. ING was supported as well, but ABN Amro was definitely a special case. They first had to buy it back from Fortis, and yeah, it was a whole mess in 2008, so people didn't forget about that, and that's why they are still so cheap. But look at that dividend yield here, 9.76. And for NN Group, almost 10%. So that's enormous. Then you have the final one with the negative earnings per share. It's Aegon. So together with ASR Nederland, in the assurance business, and ASR Nederland took over 1 or 2 years ago the insurances of Aegon in the Netherlands. So it's also a bit funny that they now have a market capitalization that is more or less comparable. And then to close the list, it's Randstad NV. If you don't know what they do and you live in Switzerland, then you just have to think about Adecco, and then you know what this company does, because they are in the same sector. Then the 10 best stocks according to the PE valuation. So you have ABN Amro, ENG Group, and NN Group, the financial sector. You have Exor, the holding with Ferrari, Philips, and Stellantis in the portfolio. So this one, I think it's with the undervaluation now of 3 billion, it's a bit interesting right now. But still, Stellantis, for me, it's a big question mark. Then you have Shell, you have ASR Netherlands, again, insurance business. Then you have the media company Prosus. Then you have the Dutch Adecco. Then you have Ahold Delhaize, one of the big competitors of Colruyt in Belgium. And then you have AkzoNobel with the chemicals and paints and stuff. So with a PE of 16.71. And to close off this list, I couldn't resist to include the 11th one, KPN, with a PE of 17.89, because all 11, they have a PE valuation of less than 18, and all the rest is above 22 or don't have a PE valuation because, yeah, their earnings per share is negative. So there are 3 with a negative earnings per share. So there are 14, there are 11 with a higher PE ratio and 3 with no PE ratio in the AEX25. Then the 10 best stocks according to the dividend yield, and look at that, NN Group 9.98 and ABN AMRO 9.76. They span the top. NN Group payout ratio is above 100%, so that's not great. But ABN AMRO still well below 60% mark, so that's really exceptional. ENG Group also below the 60% mark, but the dividend yield there is a little bit less than 7%. Then you have the insurance companies. So first 3 financial ones, then 2 insurance companies. So it's quite obvious where you have the higher dividend yields. And yeah, Ahold Delhaize, dividend yield of 3.57. That's quite interesting. So then I can go to the 10 best stocks according to the payout ratio. And there you have Exor with a 2.50% payout ratio only. So they are really aiming to become a dividend growth stock, I think, in the future, because otherwise they could have went way higher with the dividend. They only pay out 0.46 and they have an earnings per share of 18.38. So that's, yeah, it's a bit crazy that they keep their dividend so low, probably because they are buying aggressively as well. But okay, it's a choice that they made. But people that go for dividend growth strategy and then buy Exor because they will be able to grow their dividend for years and years to come. Yeah, you only have a dividend yield of 0.47, and why then not go for an ETF that invests into banks where you have a dividend yield of around 6% in total, and they will grow their dividends as well. So it's not going to be as spectacular of the growth of Exor because they have a huge margin here, but it's actually also just artificial what they are doing with the dividend growth that they are actually presenting then. So the way they are manipulating the fact that they become a dividend growth stock, it's a whole new video on its own, I think. Then you have ISM International and ISML Holding. Yeah, they are in fact the same company, but that's also another thing. Then you have ABN Amro again. You have ArcelorMittal, but I already talked about that one in the CAC 40. I still find it strange that it's in the CAC 40 because it's not noted on the French stock exchange, on Euronext Paris. It's not there. So they have to buy it on the Amsterdam Stock Exchange, on Euronext Amsterdam. So for me, it's still a question mark. So if you know why it is still in the CAC 40, let me know in the comments down below. Then I couldn't resist here as well to put the 13 best stocks according to the dividend yield and a payout ratio below 60%, because when I selected the dividend yield and then the payout ratio and eliminated all those with a payout ratio above 60%, I had 13 left, and the last three were ISM International, and yeah, it belongs to ISML Holding, so I couldn't leave it out. And then Exor and Prosus, they are just too good to leave out, because yeah, you saw that they were on top of the previous list, so I couldn't leave them out. But again, ABN Amro, In Group, they jump out. Ahold Delhaize jumps out. Shell jumps out. So those four stocks are definitely yeah, the ones that jump out to me as good investments. And the first one that I want to mention is then ABN AMRO. And as I said, if you want to go for banks, for me it's better to go for a bank ETF, so that you spread your risk better. But if you are really risk tolerant, ABN AMRO with the current valuation, it's good value. Then Shell, but I already mentioned it. Compared to Total Energies, it has a higher valuation than Total Energies, and you also have to look at the taxes. So do your homework if you want to invest in Shell or Total Energies. Find out what the tax implications are for you on the dividend, and also on the gain that you can realize on the price gain of the stock. Then Exor, so it's one of the first holdings that I can mention on this channel as being one of the best investments, because of their valuation right now. But the dividend yield is pretty low, and they also are invested into Stellantis, and Stellantis is a company in the automotive industry. They also have Ferrari, but Ferrari is better valuated than Stellantis right now. And for me, yeah, the automotive sector, it's a really difficult sector right now to yeah, to evaluate right now. So for me, that's a bit of a doubting point to invest money into Exor. And then you have Ahold Delhaize, maybe. And for me, yeah, as a retailer, I think it's right now noted at a really good value, but it's also around its all-time high. So you have to keep that in the back of your head. The earnings per share are really good right now, so that's why they jumped up. Their dividend is definitely going to be maintained in the next few years. The past years they also paid out nice dividends. So in that regard, I really think it's for me, Ahold Delhaize, I think it's the best stock on the Amsterdam Stock Exchange right now. followed closely by ABN Amro. But that one is a way bigger risk than Ahold Delhaize, although Ahold Delhaize is right now close to its all-time high. The all-time high is actually here, so it was almost 1 year ago that it was over 1 year ago that it was noted a bit higher. And yeah, with that being said, I thank you for watching this video. Please consider subscribing if you like this kind of content. Hit that like button as well. It helps out the channel enormously. And thank you for watching, and see you on the next one on my YouTube channel. Bye.